10R, Avi? Awesome. This thing today is crazy. Look at this. From $3 to 26. Mixed sum, almost break even. That's fine. It's okay. I think it will get halted now. I mean, this is the halt price. It'll just get halted one more time now. Let's see if it will. Not yet. 40 more cents. Fun to watch it. Oh, so you are still trading, Bobby, right? No, Naz, I'm not trading it. I was just watching it for fun. Someone in the Discord chat called it, and he said that Socket made his day, and I was really interested to see what it did. Good luck there, Bobby. So let's see here. Fallen Angel strategy. Yeah, this is actually a good one for Fallen Angel, and I actually wanted started working on this as well. But Avi, I love this so much. First of all, the direction where Avi took this trade to was to the long side, and if you see the daily chart, we gapped up. The 60-minute chart, I don't think you see my cursor, right? You don't see it. Yeah, it's because I'm sharing my screen on Firefox. Let me try to get my Epic pen. Yeah, I don't see it. There it is. So the daily chart, you can see here, we gapped up. The 60-minute chart, overall, it's strong. And I know he took it around here while the 60-minute candle was green, but that's totally fine because he took it overall with the direction of the 60. You can see that the stock is trending closer to the 9 EMA on the 60-minute chart. Every time it gets closer, it runs a little bit, consolidates, runs a little bit, breaks up, runs a little bit, pulls back, and continues. So his position, despite it's on a new 5-minute low, right, and below all the moving averages, and below view up, and below, I don't know, and on red candles, it was still with the favorable direction, with the direction of the 60, and with the direction of the daily. I love this so much. He was patient. He didn't take it to the long side on the way down around here or immediately on a new 1-minute high. Waited for some sort of confirmation, and you can see on the 1-minute chart we're having a double bottom. Took it to the long side. I bet the stop was at the low of the new 1-minute candle. Was it there, Avi? Or you tightened it more? I think around here it would have been fine. It would have been like really good. A little bit higher, it's fine. But yeah, a new 1-minute low, that's good. Partial, and this is smart partial. You can see around here we're getting closer to the high of the day, right? At that moment. So that was a really smart partial. It broke it, and now we're having a pattern around here. The bearish engulfing sandwich, or you can have call it like 3-bar play around here. And it's also actually it's still a 3-bar play on the 5-minute chart, but it's 3-bar play on the 5-minute chart. On the 1-minute chart, added to position, partial, and look at this. I love that he didn't exit around here. Why is that? Because there is literally no reason to exit. Stock broke above view up. It's still bullish, and we know how candles are being traded at, like, right? It could go all the way down, not make a new low, and then squeeze back up, close as a bullish candle. The next could run, or even on this very same candle, it could go all the way back up and then break. This is how market's being traded, like, right? So this year didn't get him out. Now you are having a 3-bar play on the 5-minute chart. Awesome ad, Avi. That was the ad. This is the stop loss. I personally wouldn't have put my stop loss below this 1-minute candle wick because this is what I call a fake breakdown. It's only one candle down, and you can see that mostly the level which is holding is this around here. So this is the ad. This is the stop. And then partial all the way up to the daily level. I really love how you manage this one, Avi. Good job. Did you get how much did you make? 7.8 hours on one trade. You see, guys, how this is good? don't just over partial early. Don't exit all out at 2 hours, because sometimes you will get these type of moves. And he got the whole average true range on the daily chart. You see, this is the average true range from 9 to 11, and you can see that on the daily chart mostly we're having those $2 candles, $2 candles, $3 or $4 candles. So then it's like $1 or $2 candles. He got the whole average true range in around 30 minutes. He could have just got in to the long side around here with a stop loss around here and get his 2 hours, but there is no reason. If you are in a good position, you need to manage it as best as you can and make as much money as you can from it. So yeah, well done, Avi. So twin traders, let's see what you did. Traded CCL. Now, okay, let's take a look at this thing. Okay, I see that. So this is an ABCD pattern on the 5-minute chart, but it still was not close enough to the 9 and the 5. I mean, it's not the worst yet, right? You have the ABCD pattern on the 1-minute chart, but if you just take a look at the move, this is the whole move, starting from here, ending up here, and this is the pullback. That's around 20% or 25%, I mean. And remember, what is our minimum pullback on an ABCD pattern? Our minimum pullback is 30%. I love 70% maximum or 50 to 70%, but 30% is the minimum we are looking for. And at least around here, we had it. If you have this at the low, and you're having this as the high, and you're having this as the move, you're having a little bit over 30% around here. Now, this is a good pullback. You see? Minimum you want to see on pullbacks is at least 30%. So that's the move. This was a really small pullback, but it was still a decent ABCD pattern. It's not the worst. It was decent. Now you get subbed out. Good place to re-enter. Why is that? You're having a W shape around here. This is the first. This is the second. Couple of candles confirming your direction. Not bad long. Where would be your stop loss if you take it to the long around here? Anyone? What is the stop loss if you take it here? Low of the week. That's it. Yeah, the low of the week. Why is it the low of the week? Why don't we have it like at a new 5-minute low here or here? Because we are still didn't break the high. Exactly, Dak. That's Deepak. Because we still didn't break up. So if you take it to the long side anywhere around here, your stop loss is the low of the week. If we had only 1 week, which is this one, or maybe this one, I would not put my stop loss at the low of the week. Let's say we're having only this week around here, and this is not there, and I'm taking it to the long around here. I would consider this as a fake breakdown. I'll have my stop loss around this because this is the level which is holding, and that will be enough for me. Since we had double wicks, now I need to include the wicks, and that will be our stop loss. And you see that it's holding around here, and this is why we're having our stop loss around here. We're still holding within this range. There is no reason to exit, and there is no reason to tighten our stop loss. And then we finally break out. Still decent one, not the worst one. Good job, and good job stopping out. Like at this place, this definitely was a good stop, but it was not really ready for an entry yet. No, I don't always wait for the 9 EMA rejection. Sometimes I will take it above the 9 EMA rejection. When is that? First rule, if I have double dojis, like let's say that this is a doji, and then this is a doji. If I have double dojis and a new high, I would ignore the 9 EMA rejection. The second thing is if I have enough of pullback, 30 to 50% pullback at least. If I have this and it still didn't touch the 9 and the 5, I would take it. Like if it's a little bit above it. Because remember, the 9 moving average, it's an average. Sometimes it could just get closer to it. And if it got closer to it, giving me enough of a pullback, I would take it to the long side of that. You're welcome. So how do you do today? Okay, that's good. I mean, you're still managing your risk. I love that you're starting small on your live account. You're not risking a lot, and your risk is manageable. Well done. By the way, guys, if any of you here is live and they're using DAS IB, and you set your DAS risk control, before you could edit that DAS risk control. So you'll have your U account. If you right click on it, you'll see edit DAS risk control. And this was something bad, because some of us will put max loss for the day. For example, let's say $200, $150, $50, whatever you want it to be, max loss for the day. Then hit that max loss, right click, edit it, and remove it. This is our psychology. I want to make my money back. I'm going to remove it, and I'm just going to continue trading. Now you can do this. You could email DAS and tell them remove edit DAS risk control, and don't bring it back unless I email you, or like don't edit it in a month or something like that, and they will honor that for you. So this is actually really cool. If you can't really hold yourself accountable and you always edit this DAS risk control, because I have some of the members I've been mentoring, they were telling me I added DAS risk control like you told me, but I can't. I still keep removing it, and I turn a good day into a really bad day, or a bad day into a worse day, because this is always there. Now you can simply just email them and tell them remove it, and don't change it in like 30 days. They'll honor that for you, and it's really good. You'll have that outer control. Hey, Mitch. So Sam, let's see what you traded. Awesome. So this stock we've been watching in the pre-market, and I've been watching this one for a 60-minute breakout. Why is that? Look at this. This is how it looked like in the pre-market. Ignore this. This wasn't there, okay? I saw this one, and that was the flat top. I liked it. So this thing was only a long for me. Unfortunately, in the pre-market, it dumped down and it caused this candle. Do I trade it to the short side? No, I don't. I'm waiting for this thing to come back to the long side, because it's a bad short, right? Strong daily chart, ABCD pattern, strong 60-minute chart. We broke down, but we ignored this thing to the short side. What did Sam do? Look at his patience. Dropped down, came back up, didn't take it to the long side, dropped down, came back up. You're having a higher low. We are breaking the high around here, or sort of an ascending triangle, took it to the long side and partialed all the way up. And finally, we had our 60-minute breakout. There it is. Right. Unfortunately, it didn't make bigger move. It rejected that yesterday's high, but this was really good patience, really good entry, and nice risk to reward there. Indicators: the long on the daily chart, red candle on the 60-minute chart with a long lower wick indicating long. You see this? He saw this wick, and he didn't say, okay, this is a red candle and it indicates weakness. This wick around here indicates a fake breakdown, and it indicates some strength. Higher highs and higher lows on the 1-minute chart. Where is the one? Unfortunately, the one is not screenshotted, I guess, before that. Yeah, it's not screenshot. Oh, it is. There it is, our bottom, and it's making higher highs and higher lows. Near the top of the 5-minute range, there it is. Entry as a new 5-minute high. 20% partial. This is good. You see, this is like 20% partial at the previous level. Smart. 50% partial at the next 5-minute green candle. Why is that? Because it's third 5-minute candle. I like that. 20% at the top of the same candle. And stock seems extended from the average true range, so he took another 50% around here. Look at this. He just implemented everything. Average true range is hit on this stock, so that needs to be a big partial just in case, and he was right about it. It dropped down. Good job, Sam. Bobby, let's see what you traded. So Bobby traded AMD. Okay, I see that. Look at these guys, waving down, waving down, waving down, a level around here. 1 minute open range breakdown, breaking the 5 minute range, took it to the short side. What was your stop loss, Bobby? Personally, I would have put it at least on the middle. Why is that? Because the stock could weaken a little bit and then break down. A really tight stop loss would have been a little bit risky. View up, okay. View up is not bad in this case because we could see that it actually held. Yes, we wicked one time above it, which is risky because we could have wicked one more time above it. Still not the worst. Nice partials added on a small reverse ABCD pattern on the 1 minute chart, which also was a 5 minute open range breakdown. And then partial all the way to the low day. That's cool. I like that. Good job, Bobby. Let's get there. Some guy traded bingo. Start was looking for early reversal or pullback since last Friday. This price soared. So he put into his consideration the daily chart around here. And this move around here was so big on Friday. That's why he was looking for a small pullback at the open because of this move around here. Was this a long around here? I think it was, right? Okay, I like the fact that you waited for a pullback, and that was smart. I mean, after a move like this and then it gaps up, it's really highly unlikely that it will go up. It needs to make small pullback before a continuation. That's what we're saying every time. It's not an open and close, right? The next candle will open, it will go a little bit down, and then it will continue if it's still strong, and that's what you waited for. The entry, though, was a little bit risky. Why is that? Because you entered on the way down. You took it to the long side, you added to your position, and that got you stopped out. Then you're re-entering one more time at the bottom. And what could have happened around here is it dipping a little bit more down here. If you wait at least for a new 1 minute high, just for confirmation, you could take it to the long side, set your stop loss, and you still will get the good risk to reward. You see that? Now the short was good. Why is that? 1, 2, 3, and we know that after 3 consecutive candles, the stock could do a pullback, especially if the move is that big, and that's a really big move. It's $1.30 on a $15 stock. It's somewhere around 9-8% of the stock's price. It's too much, and this is a straight move. It definitely needs to do a pullback. We're having a double top. You took it to the short side, but again, the stop loss was so tight. You see? I think that was short and stop. Then you took it to the long, and that was quick scalp just to get your losers back. Some psychology around here. Revenge trading, trying to make the losers quickly back. Be careful about doing that. The short was good. It was a little bit late. If you managed to get it around here, it would have been good. You see, climactic volume at the high of the day, selling pressure, small bearish candle, new 1 minute low, get that early candle, set your stop loss, and you will get the risky reward. Even with an entry around here, which was late, you could get the 1-to-1. So don't tighten your stop loss. Why is that? We just said that it could go all the way up, not making you high, and then drop down. And always leave at least 5% of your position to run. At least 5%. Remember how we discussed how you can turn this 5% into 40% or 50%, and sometimes even more of your original position? Just hold with 5%, or even hold with 1 share for starters. Good job, and thank you for sharing that. Mitch, PLTR. So PLTR was a stock that I did not watch today. Let me show you PLTR actually. Close. PLTR. I didn't watch PLTR for one reason. And you could see it, right? The huge drop in the pre-market. Usually when stocks drop that much in the pre-market, it's similar to them gapping out that much in the pre-market. We don't take them for a continuation to the long side because they rarely make it. And same thing around here, we don't take them for a continuation to the short side because they rarely make it. But it seems that it worked out, and I'm really happy about it. There was a huge pullback in the pre-market, which might have helped this. That was the only reason why I didn't watch it. Looking at the smaller time frames, though, the setup was good. Nice range on the 5-minute chart. You're going with the direction of the trend. 5 or 10-minute open range breakdown, reverse ABCD pattern, short and partial all the way down. Now, I wouldn't have partial that much around here because this is a clear consolidation. And when the consolidation is going that sideways, especially to the 9, whether it's on the 1 or on the 5, they usually touch and drop. So leave small share size just to see what's going to happen around here. And those hammers, they're traps. I see them happening a lot. You will see that hammer after a lot of consolidation. People will think of it this way. Okay, we're having a support. They'll say, okay, we're having a support. It's so flat. The price is holding around here. I'm having a hammer and a new 1-minute high. But what's that? That's hammer on the 1-minute chart, on a bleeding chart on the 60 and the 5 and the daily. It's literally nothing, right? They'll be taking it to the long side on the new high after the hammer. And I bet after this candle, it just dumped. Just let's take a look at that. Not sure, but most probably that's what happened. Because this just happens a lot. Yeah, there it is. Our hammer, right? That candle, and then it just dumps. Yes, not so big of a dump, but still, it's decent, right? That's basically double of what you got around here from on your short. Good job, Mitch. You're welcome. So let's see this one, Zach. CCL. So CCL, not bad on the daily chart to the long side. We could see that we're slowly changing the trend to the upside. We're breaking this neckline around here. Still choppy, so definitely taking partials closer to this level, closer to this level. Right, closer to this level. Definitely taking a partial, strong resistance around here. Let's take a look at the 60-minute chart. I'm not sure if this was in the pre-market. If this was done in the pre-market, I doubt I would have traded it. No, this is not in the pre-market. This is after market open. I see that. So what do we have around here? 1, 2, 3. 3 consecutive candles on the 5-minute chart. What does this mean? This means that there is a pullback waiting for us. Let's take a look at the 1-minute chart. This is what he did. Awesome, Zach. I love this so much. Parabolic reversal. Little bit of a late entry. Don't always wait for the new low. Try to catch it a little bit earlier, especially after 3 minutes confirmation candles. If it was only one candle and you're taking it on the very next candle, maybe yes, you might want to wait for the new 1-minute low just in case. But here you're having 3 confirmation candles, and once it dips, it will just dip. You see how fast it dropped. That's what caused the late entry here. And you could think of it this way. Now, this is your risk. Or maybe if you use this, it's still big risk. While it could have been this. And look at the reward now. This is 3 R's instead of having 1 R. On parabolic reversals, entry really matter. Every cent really matters. But I like your thought process. It was really smart. 3 candles, it means that pullback is waiting for us. Wait for the confirmation candle, take it to the short side, and write it down. Does this mean that this pullback is a reversal all the way to VWAP? It's not. We know that this pullback most of the time goes to the 9 on the 5, especially on strong stocks. So our final target on this parabolic reversal is the 9 and the 5. I usually leave a little bit for a bigger run, but 70% out at the 9 and the 5. 100%, I'm exiting 70% out at the 9 and the 5. Why is that? Because usually we start holding the 9, and once I'm sure that, okay, we are forming an ABCD pattern above the 9 and the 5, I could take a position to the long side and ride it up. That was a good one. I like it. Now, one thing though, you could have still held your stop loss below the wicks because this is a range around here. We still didn't break, and we know that it could continue consolidating right there. No reason to just bail on it. Not that there is no reason. There is actually a reason, which is the double top on the 5-minute chart. So it's not the worst exit. But usually what drops fast comes back fast. comes back up fast. I would leave at least small position and give some of the profits back. If that was a small partial and you still had a lot around here, exit most of your position and leave 5 or 10%. And if it's breaking up, you could add and move your stop loss to the middle of the range. But yeah, both of the trades were really good, well managed. I love that. Let's see what we have there. So Bobby, this is a trade on blue. What did you do here? Okay, this is good. I like it. It's a 5-minute open range breakdown with a small reverse ABCD pattern on the 1-minute chart. You took it to the short side, gave it enough room, got you stopped out. Nothing to be mad about. This totally good trade, which unfortunately didn't work out, and that happens, right? Now, what do we have around here? It's coming back up, rejects the level one more time, and gets back to the low. Small wedge to the downside. Right, small wedge to the downside, took it to the short side. What would be my stop loss in this case? I would put it personally around here, just in case, because if it breaks around here, we'll have sort of a double bottom with the second bottom higher than the first one. Then we're breaking a level around here, which means that we are most likely going to hit this level around here. So no reason to have this risk around here. If it hits this, it will hit that. No reason to have a wide stop loss. That will be the stop loss. That will be the entry, and that was a good run. Well done, Bobby. Let's see this one. Zach, not always. It depends. I'll discuss that once I'm done with the reviewing. Yeah, I'll talk a little bit about that. So Baba, let's see what you did. You traded, what's that? I can see the stock name. Okay, it's PLTR, right? Yeah, it's PLTR. So I guess the same setup, right? Small reverse ABCD pattern to the downside. It was weak overall on the bigger time frames, took it to the short side, and that was a nice risk to reward. I personally don't take those. I told you why, a huge drop in the pre-market, but that was nice. The entry was still good. The stop loss is not bad. A lot of wicks around here, which could be a little bit annoying. If you took your entry somewhere around here, once the candle opened, definitely this would have been a bad stop loss, and this would have been a better stop loss because it could have just simply did the same thing and dropped down. But since your entry was at the breakdown, there is no reason to have the stop loss up the wicks. This stop loss was totally enough. Good job, Baba. And actually, let's see what you are here. You're welcome. FSR, ABCD type C. So for it to be an ABCD, first thing we need to check the bigger time frame. Are we going down or we are going up? If not, where is my desk? There it is. So look at this FSR. Honestly, I would not be looking at it as a reverse ABCD pattern, but it is definitely a short play. A short play because you're having a head and shoulders pattern. Look at this. Shoulder, head, shoulder, neckline. This head and shoulders pattern, it's a weak pattern. At the high, you're having a reversal candle on the 60-minute chart, shooting star, right? Most likely that after a shooting star, you are going to make a new 60-minute low. Overall, you could get at least a small move to the downside. Not a reverse ABCD pattern, but still a good short right there. Nice entry around here. Stop loss maximum around here. Add it to your position at the break. I like that. Stop loss into the middle, right? And partial all the way down. No reason to exit all around here. You are really patient here, and you added really well to your position. And we know that after breakdowns, what could happen? A retest. There is our retest. In fact, you could have held it and you could have added around here. Still, you didn't give up. Nice re-entry. This time you were more patient about it. Took a partial. Now, this was risky because it's 1, 2, 3, far from the 9, right? That was small consolidation. And now it's getting parabolically down. After this, we expect a pullback. So no reason to add around here. Better to enter heavily there, or with your max size if you didn't do that. Yeah, well done. Let me show you my trades, guys. I didn't have the best day today. I actually struggled a little bit. So look at this, Microsoft. What do you see on the daily chart? Sort of a wedge to the upper side. And looking at this, I was really long biased. Now looking at the 60-minute chart, let me remove this. It's annoying. Remove. Looking at the 60-minute chart, it was good for a long, and we had a decent hammer on the 60-minute chart. What did I do? I took it in the pre-market to the long side, and my stop loss was around here. I got slippage. I lost 1.6 R on this trade here. Nothing to be mad about. There was no volume. One order just got a lot of shares filled, and I lost on it. Totally fine. Market opens, closing as a hammer at the low, sort of fake breakdown. I'm still long biased because this stock for me is strong, and I'm waiting for this break. I knew that if we break, maybe not today, maybe tomorrow, we'll see, we could just make a decent run. So definitely tomorrow I'm watching Microsoft. Now took it to the long side, stop loss around here. I got enough reward up until here, I think around 2 hours, but I still wanted more. And because the breakout still didn't happen. Now we're at the breakout area, I'm adding to my position, moving my stop loss, and it got me out. That was a hotkey mistake. It's totally fine. So yeah, 2 trades down 2.5. Traded Billy. Same thing. Daily chart, ABCD pattern. I like it to the long side. 60-minute chart, decent range to the long side. Mark candle opens, goes down. After it's down, it's squeezing back up. Entry here, stop loss here. 1 R made, not partialing. I'm waiting for the breakout. Rejected it. Exiting for another R loser. 3.5 down for the day. Final trade, Zoom. This was a good one. What did I do on it? Same thing. ABCD pattern on the daily chart. Nice hammer. Market opens. I'm waiting for the candle to close. Took it to the long side. Stop loss around here. Added to my position, and I moved my stop loss around here. Then I knew that my stop loss after the add was so tight, and the stock would just get closer to the 9 on the 5-minute chart. And if it does, that will be like 2 R loser. That's so heavy on Zoom, so I removed a little bit of the shares I added. I went heavy because I wanted to make all the losses back, which is a bad idea, because if you lose, you could have a double of your max loss. I'm already down 3.5. My max loss for the day is 4. And if this trade gets me stopped out, I'll be down 4.5. And with a double share size, I'll be down 5.5. And that's something I didn't want to actually handle. Starting the week, breaking the rules, way over max loss, and after commissions, it will be somewhere around 6 hours, a day and a half of profits. It's basically too much. I didn't want to do that. I decreased my share size. And then I was patient about it. Stop loss around here, entry around here, partial all the way up. I made around 4 or 4.5 on this trade. Yeah, it was 4.5. It's not a green day, and I'm not at the goal. I'm up 0.5 or maybe 0 after commissions. I still didn't check, but that's my day. Not the worst day to start the week, and still not the best day, but yeah. This is one trade. Billy, second trade. Microsoft, 3, 4, and hotkey mistake 5. Done for the day. Thank you, Bubba. I'll stare because the pattern was so good on this thing. Look at it. It's going up. It's consolidating, pulling back, closing as a hammer. Today it's gapping up. 60-minute chart. I see this around here. And I see that the next target we're having is this around here. Look at this room. This is a great gap for a target. Yeah, daily, definitely. I pick my stocks on my watch list. You'll notice that every time my watch list is so different from the rest of the moderators. I'm not saying that my watch list is better than theirs. It's just my style of trading is different from theirs. I pick my watch list based on daily patterns and bigger time frame patterns. If I like it, I trade because I'm simply a pattern trader. I don't trade much based on volume. I don't trade much based on level 2. I watch volume and I watch level 2, and some of my trades are based on volume level 2, especially parabolic reversals and breakouts on ABCD patterns. I also pay attention to volume. but mostly I trade patterns. And for me to trade pattern, I want the bigger time frame and the bigger direction to be in my favor, so that I can get small move. Now this doesn't look like small move, but it's small move is what I want to get. I want to get a portion of this big move right here. So that's it. Zach had questions. Do you use hard stop at break even? No, Zach, I don't use it. I move my stop loss to break even only if there is a reason to do. Let's say Zoom went up. I took partials and now it's pulling down. Will I exit at break even? No, I will not, because this could be a pullback before continuation. I will still hold my stop loss to my original. I will hold my stop to my original stop loss. Now that it's coming back up, dropping down, coming back up. Now this is the new technical level. If it goes here, yes, now I'll exit at break even, because there is a reason to exit at break even. Other than that, I'm not exiting at break even. The 60-minute chart just shows me the bigger trend, the overall direction. $60 and daily are my the charts or time frames which are showing me the favorable direction. So do you have any more questions, guys? By the way, guys, if you are still not on our Discord server, make sure to join. It's not all about day trading, a lot of discussions about swing trading, and I like that members are posting their swing trades ideas and their swing trades watch list. You can't watch the whole market alone, right? And especially if you're a swing trader, maybe you'll be interested in checking members watch list. Something might be suitable for you. Discussions on weekends. It's open 24/7. It's free for everyone. Feel free to invite your friends. I know someone of your friends or colleagues might be interested in trading, but they don't want to start yet. They could just keep an eye there, watch it. Maybe in the future, it'll be of help for them. So yeah, that's it for today, guys. Trade safe, and I'll talk to you tomorrow.